All right, welcome everybody that's coming in right now. We're about 2 minutes prior to start time, so we'll let everybody come in, but we've got a lot of people entering right now. So well, you guys can in the chat, let me know if you can hear me okay, if you can see me okay. I don't know if you guys can see Ryan as well, but just let me know that it's all working and the chat's working as well. Hopefully. Awesome. Yeah, let me know. Welcome everybody. Let me know in the chat that you can hear and see everything okay. If there's any issues, let us know and we'll fix it before we get rolling here. We got another minute or two before we go. Thank you. Nice.
Perfect. Thanks, Braden.
Thanks everyone. Yeah. Welcome everybody. Welcome. Appreciate you guys taking your time. Nice.
I think we got a nice full group here tonight, Andy. This is looking good.
So far, we got about 15 in here for now. And I'm sure most people will pop in and out as we go. So yeah, don't worry, everybody that's on right now. If for some reason you guys need to bounce out and you miss something, this is recorded. So I will have I'll have a recording of this sent out to everybody within the next day or two after this is done. So if you miss something, it's easy to get back into it. Or the other way too is if you need some more clarity on something, just book a call with us and we'll answer everything we can on that. So we got another about a minute or so before we start this, but yeah, we got a good turnout. So this is good. Again, welcome everybody. I like to just start out saying that if you guys have any questions, again, throw them out in the chat as we go along. We'll do our best to answer everything. If it gets a little bit more personal, just for you, either I ask we wait till the end of it during the Q&A session at the end, or just simply book a call with us and we can talk about your stuff one-on-one. But if it's more general to this, use the chat as much as you can. We're here to answer questions for you. So yeah, we got.
Yeah, and ask away as we go along here, guys. I'll be monitoring that chat box as we're going along. So if something comes to mind, just throw it in that chat box for us. What I typically find with questions is if one person has the courage to ask that question, there's usually a handful behind them that are wondering the same questions. So please feel free to ask away.
Perfect. All right, well, we got at least 19 in here right now, so we might as well get this kind of rolling here. We got a lot to cover in a short amount of time. So yeah, here we go. Again, welcome everybody. This is a good webinar for first-time home buyers. Honestly, back when I first bought my first house, it was kind of a nightmare. So Ryan and I have teamed up together to make sure this goes a lot smoother than it did for me and to make this a really, really easy process. So as I mentioned in the first message I sent out to you guys when you signed up, just for signing up, this is my thanks to you guys. This is my complete guide to buying a home book that I have developed. It's chock full of some really good stuff about buying a home. This will come to you in an electronic version, so you can read on your computer, laptops, whatever you have. Also, you'll get a condensed buyer's guide version that just has little cliff notes on everything and what we do for you as as a team to help you buy a place. So again, thanks everybody for showing up and taking time out of your day today. This is going to be coming at you guys. You're probably going to see it either tomorrow or Friday, and it should be hitting your guys' inbox. So watch out for that. But okay, as we get rolling here, first off, since buying a home, especially your first home, is for the majority of people one of the biggest things you purchase in your life, I'm going to say a lot of people feel a lot of these things. So if you want, throw it in the chat. Let me know. Do you guys feel this at all, concerned or stressed? A bit intimidating, especially when you hear everything going on in the news and on the market and things like that. And so basically what Ryan and I are going to do throughout this whole webinar and going forward after this is our job is to alleviate all these for you, to make this a stress-free, uncertain time when you're buying your first home, because it is a big step and we want to make sure it's smooth. So we're basically, what we do for you guys is literally hold your hand through the whole thing step by step to make sure you guys know what's going on. So before we get rolling with this, I just want to do a little bit of introductions here. Clueless, that's a good one too. That's fine. That's what Ryan and I are here for, to make sure that whatever happens, that we're going to walk through it. So yeah, we're here for you guys 100%. So let's just do a little bit of introductions before we get rolling on everything. So I'm going to start with myself here. My name's Andy Goddard. I am a realtor. I started with Royal LePage when I first started real estate, but since chose to switch to EXP Realty back in January, and just it's a bigger brokerage, highly expanding, just so it gives me more resources to help out my clients. So it's been really great. I've helped a lot of satisfied buyers and sellers, a lot of first-time home buyers I've helped, because I really, really, really like helping first-time home buyers because it's such a big step. So that's what I really, really, really like to do. I live out here in Warman. I service Saskatoon and the surrounding areas, so I've gone as even far as Regina and Coppell, depending on the person, but I do service this area. I live out here in Warman since 2016. I'm out here with my wife, my son, and my daughter, and well, it says 2 dogs, but unfortunately, one we had to put down, so we have 1 dog. I forgot to change that, but so what I'm going to do here is, just for everybody in the chat here, I'm going to put, this is a Linktree account, which has all my social medias for my business and my personal, so you know exactly who I am. I don't hide anything from anybody. So that's in the chat. Also, there's a booking link. So I'm going to be throwing this booking link out a lot. Just if you guys have more questions, or you want to get things rolling more, or just anything you want to talk to us one-on-one, book a call with us and we'll be able to talk one-on-one and find a time that works for everybody. So but then anyways, that's me again. I'm Andy Goddard. I am on the real estate side of things. So I'm going to hand this over to Ryan here.
Good evening, everybody. Thanks so much, Andy. Andy is an absolutely amazing real estate professional, guys. I've worked with a lot in the industry over my many years in the industry. Andy is one of the best. He knows this industry inside and out, and he works with you all the way along the process to make sure that we find you a great home, and we handle all of the process for you. Like you mentioned, we walk with you hand in hand all the way through this process to help you all the way through it. And we're excited to have you with us today. So my name is Ryan. I work with the mortgage group here in Saskatoon. I've been in the mortgage industry for 20 years now, over 20 years now. I have actually done broker training and lender training in the Saskatchewan market for a great portion of that as well. So I know the industry very well. I know our market very well. I know this can be an anxious time for you, but we're here to guide you all the way through the process. So absolutely no worries. You've got 2 great professionals here walking hand in hand with you all the way through. I do service the Saskatoon and surrounding areas. Like Andy mentioned, we have the ability to really have our process run, either face to face, but we also have a great online presence as well. So we can reach out to our remote areas in the province as well. We do lots of stuff via phone calls, via Zoom, via online applications, things like that. So don't worry if you're just outside of the Saskatoon area, we can meet with you face to face. We can also do a lot of stuff online as well. I live with my wonderful, amazing wife. I've been married for 27 years now, and I have 2 sons as well. So looking forward to helping you all the way along, and I'll flip her back to you, Andy. Thanks so much.
Awesome. Thanks, Ryan. So yeah, Ryan and I connected a little while ago, and we just been teaming up together to make this happen for a lot of first-time home buyers. So you guys are definitely in some really good hands here. So Ryan, again, he's on the finance side of things. So any financial questions, hit it in the chat. Ryan's going to be here no matter what, answering those questions behind the scenes. Well, you guys are lucky enough to hear me ramble on this entire time. So in the chat again, there's I got Ryan's website is up in there. Also, the booking a call link is there as well for you guys. But again, I'm going to keep throwing that out there as we go along, just to make sure that everybody has it and are able to book something with us. So let's get rolling with this here. So just to put it in a really general terms, here are the steps to home ownership. So first things first, you guys come to this little webinar. That's awesome. This is going to give you a ton of information, but honestly, when it comes to buying a home, there's so much that goes into it. So we've tried to cram as much as we can into this, but there's still so much to cover. But this is the basics. So if you come to me and say, Andy, I'm ready to buy a home, I think, what's my first steps? And I always say, we need to get a pre-approval for a mortgage, unless you have straight cash, which that's even easier. But most of the time, we're going to need Ryan for this. And so I said, you know what? I think you should have a great conversation with Ryan. Talk with him. He's going to walk you through everything on the financial side of things, which we are going to cover right away here. And then let's just skip that and just say, hey, you know what? Ryan texts me, says, Andy, this guy's great. He's pre-approved. This is how much he's approved for. Go on and start looking for a home with him. So then I'll talk with you again. I'll sit down with you. We'll discuss what you need in a home. Do you want an apartment style condo, a townhouse, a detached home? How many bedrooms do you need? Bathrooms, garage, everything you can think of in a house. We figure out what it is you need that's going to best suit you and your family. And then once we get that, then I jump on and I find out all the properties that are currently available to buy in what you're looking for in your price range. If for some reason we're having a little bit of issues, sometimes I can always jump off market, see if there's people with rental properties that are willing to sell, or maybe some for sale by owners that are willing to work with us, kind of things like that. But majority, we're just going to look to see what other realtors have out for sale. So once we find a really good couple of places, we're going to go take a look at them, make sure the houses are good, things like that. And then once we find one we really like, we go into a negotiation period where we discuss back and forth how much we want to offer, what they're willing to accept, and then we come together to a price that works for everybody. And then we go into what's called about a 2-week. I give about 2 weeks for conditions, so that can put anything in there from like a home inspection, any other inspections that we think we might need for the house. And also it gives Ryan time to finalize your pre-approval, because right now you're pre-approved for a certain amount of money. Now he knows how much exactly it is you're going to need to borrow, and now he's going to get to work to make sure that's all good to go. So he needs about that 2 weeks roughly. It could be a little less, but I like to give him some good time just so he's anything that comes up, we're good. So then once we get all that going, we'll do a home inspection, a condo review if that needs to be, if we find a condo. Ryan's finalizing the financing. So once he says, Andy, he's good, finances are good, lets you know that the finances are good, I remove conditions as long as the home inspection and other conditions are satisfied, and then we have a firm sale. So at that point, now we're just waiting from the time we have a firm sale to possession date. If it's a vacant home, we can probably get you in about another couple of weeks. If there's somebody else in there, we need to give them time to move out and whatever time works for them. And then in that meantime, you get things set up like insurance, because you're going to have home insurance. And then you sign on and you sign all the documents over with the lawyer about a few days prior to possession day. Meet up with the lawyer, transfer all the documents over, all the mortgage documents come over, sign with him, and then we're good to go. So once possession date comes, they say keys are released, I'll meet you at your new home. We'll walk inside, do a full walkthrough to make sure everything in there is good, nothing looks out of place, everything's working properly. We test everything before I walk out. That way, if there is something wrong, I can go back and say, this isn't working on possession day, we need it fixed. But if everything's good, we shake hands, take a picture, things like that, and you're off in your first home. But I mean, that's a lot to go through. And like, there's so much that can go into that, but that's just the basic general thing. But the very nice thing is when you're working with Ryan and myself, for buying a home, you do not pay us fees. You don't pay him fees to do what he does for you, and you don't pay me fees to find you a home. The realtor fees come out of the sale of the home. So when you go to sell it, that's where our fees come from. So that's nice for you guys. It's not going to cost you anything in that regards. So there's no fees for us. So that's the nice thing. Again, if anybody has any questions on that process, which is a lot, which we'll dig into here, let us know in the chat, fire them away. We'll go from there. But if you want, you can also, again, like I say, there's a booking link, book a call with us. So we're going to jump into now a couple mistakes that people can make. And so we're going to cover the finance side of things first, and then jump over the real estate side of things. So the first mistake is ignoring the first-time home buyer incentive program. Now, has anybody actually ever heard of this before? This is from the government, and it is to help out first-time home buyers. So let me know in the chat if anybody's ever heard of this before. And if not, great. We'll make sure you guys are very informed on this. Awesome. Oh, look at that. People, oh, that's cool. All right, so there are good sides to it and there are bad sides to it, which we can cover. It is good. There are some things to be aware of, though, so we're going to cover that. So the government of Canada has so far used about $1.25 billion to help make home ownership more affordable to first-time home buyers. And so what is it and kind of how does it work? So what it is, honestly, it's a shared equity mortgage. So they're basically investing in the value of your home. So they invest in both the upside and the downside of the property value, kind of like stocks. If you invest in a stock and it rises in value, you get paid more. If it goes less, you lose a bit of money. So that's they're investing into you. So it's not interest bearing. You don't have to make any principal payments on this, and it's repayable at any time without a prepayment penalty. So what the government is going to do is, with an additional 5% down payment, they're going to give that to you. So in order to get approved for a mortgage, you have to have a minimum of 5% of a down payment of the purchase price. They're going to give you an additional 5%. So I'll explain how this all works and why it's beneficial and what things to watch out for. But first off, who can apply for this? So basically, as long as you're a Canadian citizen, a permanent resident, and a non-permanent resident, and are legally allowed to work in Canada, you can apply for this. At least one person in the home, if you're going in with your spouse or somebody, as long as one of you hasn't owned a home before and you're a first-time home buyer, you can use this. If you're going in with somebody, as long as your qualified annual income is $120,000 or less per year, you can qualify for this. If you're over $120,000 a year, the government feels you don't need their assistance. The combined insured mortgage and incentive amount cannot exceed 4 times the total qualified annual income. And the maximum down payment, including the 5% extra they give you, cannot exceed 19.9% because this program is not going to use or be used to avoid CMHC insurance premiums, which I'll cover a little bit more about that in a few more slides here. But you can't go over 20% using this program. There is another first-time home buyer plan too. If you have RRSPs, you can use them as well. You can take up to $35,000 per person. So if you and your spouse are going into this and you have RRSPs, you both can take $35,000 out to use as a down payment. They can be used at the same time with the first-time home buyers incentive program. They're not exclusive. The only thing different is with the RRSP program, the money in the RRSPs has to have been there for 90 days. And after about, I think, correct me if I'm wrong, Ryan, but after 2 years or within 2 years, you have to start paying it back. And you can pay it back in chunks. And so you don't have to pay it all back at once. You can just start paying it off, but you have to start within 2 years of using it. So those two.
That's actually absolutely right, Andy. It's you pay it after that first year. You have to start paying it the second year, and you pay 1/15 back of that every year for the 15 years until that goes back into your RSP account. Absolutely right.
Perfect. So that is another option for you guys, and I'll explain. You'll kind of understand why you can't pay the 5% down payment back in installments, and I'll explain why too as we go along. But so when do you pay it off? So this is where it comes in. So you either pay it off either when you sell your home, anytime in the first 25 years, either by a lump sum or you can refinance your mortgage, or once you finish off your 25-year mortgage term, you can pay it off again, either by a lump sum or using a small equity loan. So those are the 3 ways to pay it off. So here's an example, and also it's going to show why you can't pay it off in installments. So I like to use 400,000 because it's just easy math. So if you buy a home at $400,000, the 5% of that is $20,000. So they're going to give you $20,000 right away. So now let's say when you decide you're going to pay it off, your house value rose to $500,000. They're going to want you to pay back the 5% based on the value of the property or the current value of your property. So they're investing in you. They want to see their investment grow, just like we want to see your investment grow. So just watch that when you go to pay it back. It has to be based off of what the current value is. Now, if it falls below what you paid for, you pay them back. Now, see this, I don't know, Ryan, you might have to correct me because I've heard from different sources here, but that if it falls below that 500 or that your initial 5%, that you only pay back what, again, if it's below that 400,000, you just pay back the 5% of that. I have heard as well, though, some have say they don't take less than what they've given you. So
no, you're absolutely right on your slide, Andy. It's exactly an equity position. So if your home value does drop, like to that $300,000 mark, you would only have to pay back the $15,000 instead of the 20. So your 5% is exactly what it is as of the day you want to pay it off. The current value of your home, you would pay back 5% of that. Absolutely, it can be less.
Right. Perfect. So yeah, and that's why you can't pay it back in installments, because they need to know how much your home is valued at when to pay it off, right? Since it fluctuates so much throughout the years, it's just hard to tell. So just that's a little thing to watch out for, but that's why they're investing in you, because they want to see their investment grow as well. So here's an example. I think, some people might be thinking, why is this a benefit then? If you're just paying them this money back, where is it going to help us? So this is a little example. So again, let's say you're going to buy a home at $400,000. You need a $20,000 minimum down payment. You're just going on your own. That's fine. That's good. Your mortgage amount you need to borrow after your down payment is in there is $380,000. Now the government of Canada is going to kick in, give you another $20,000 to help you out a little bit. Now you only have to borrow $360,000. So now instead of, your monthly payments are going to be a little less now. This is where they're going to help you, is because they want to just give you a little bit of a break in monthly payments. That's where this help comes from. And also I mentioned before that they're not going to help you get over mortgage insurance premiums. So the first, at just the minimum at 5%, the mortgage insurance premiums that are all-time high. If you put 10% down, it drastically drops. If you put 15% down, it really drops. And then 20% down, anything at 20% and over, you don't have to pay insurance premiums. That's why they're not going to help you get over that. But what they're going to do is give you more down payments, so it drops your insurance premiums and less money you're borrowing from a lender, which means less monthly payments to help you off at the start. Yes, you're eventually going to have to pay this off, but they're just trying to give you a little bit of a boost. And also the other thing you can do is, instead of less payments a month, more of a down payment can honestly give you options to go of a higher price of a home. It can go either way. It's either if you want less payments a month or a little bit higher value of a home. It can work for both ways of that. So that's kind of where some value lies in that. So it's kind of a lot to cover. Again, if you guys are thinking that this is going to be a really good benefit to you, again, book a call with us, reach out to Ryan. He'll be able to explain that a lot more detailed if it's a good fit for you or not. And you can go from there. But I just want you guys all to be aware of, there is a good program here to just help you out a little bit at the start. So, and I've had a few people, first-time homebuyers, use this because it has helped them out. It has got them into a little bit of a higher home that worked for them, and so it works. So they were good with that. But if anybody, again, has any questions on the first-time homebuyer incentive program, throw in the chat, let us know, and we'll be doing what we can to help you out with that. Again, booking a call with us is also another great way to do this, because we can talk you through it one-on-one, no issues there. So yeah, if no more questions on that, we'll jump to the pre-approval process, because a lot of people are wondering, how do I get it approved? So there's 3 things they're going to look for, that Ryan's going to look for when we go to get pre-approval. We're going to look at your credit, and usually they want to see somewhere around 620 to 650 is a good starting range. Higher is always better. If it's a little bit lower, we can still kind of work with things. It all just depends on other financial situations, but that's kind of where they want to see. For income, they're going to want to look at least at 2 years worth of tax returns. If you have a salary position, we can easily get to your employer and just get them to write us out a letter stating how much you make per month or per year, and then we have that in writing, so we could just use that instead as well. And then they're going to look at a down payment. So again, like I've mentioned a lot, 5% is the minimum down payment you have to have in order to get approved by a mortgage, or approved for a mortgage, sorry. And there are about 3 to 4 ways to get a down payment. Now, the first way is your own savings. Second way is using that RRSP program that I mentioned earlier. 3 is what we like to call the bank of mom and dad. So an immediate family member can give you a gift to use as a down payment. And the 4th way is more inclusive. If you are part of the Métis Society of Canada, they are giving up to $15,000 for a down payment. Now, same idea, you have to be able to be approved for a mortgage in order to get that, but they will just help you out, and it kind of goes hand in hand. So if you want any more information on the Métis grant, I have some good documentation for that I can send your way, but that is also an option. So yes, that's a good question. That always comes up too. So we're going to cover that. Ryan's got some good information on that. We say 2 years worth of tax returns and income and things like that. But we do have a lot of people that are new to Canada that come in that looking for a home, and we have a program for that too, which we're going to cover in another little bit here. Ryan's going to explain all that, so no worries there. So approvals are underwritten. So Ryan's going to get all your information, and once we have a place and we've got an offer in, Ryan sends it all off to the underwriters, and they can be fun some days, but no worries there. They're going to review your income. They're going to review your credit, your down payment source. The great thing about this is it's reliable. We know exactly how much we can qualify for. We know how much we can shop for, things like that. So this is the best way to get a house, because honestly, if you aren't approved for a mortgage, there is really no point in searching for a house, because it's not going to happen, right? So this is such a big, important process. So as we mentioned here shortly, here's a new to Canada program. Ryan has some great information on this, so I'm going to let Ryan take over for this part here.
Perfect. Well, Olumoyiwa, your question couldn't have been more perfect for the timing that we had on our slides. So absolutely, one of the biggest segments of the first-time homebuyer market and one of the largest drivers of the housing economy in Canada and the growth in Canada is that new immigration that we do have, people coming not only into Canada, but coming into Saskatchewan with our housing in Saskatchewan is some of the most affordable in the country, and we are seeing a lot of people immigrating not only just into the country but coming all the way into Saskatchewan for affordable housing as well as some great employment opportunities. So we're seeing a lot of things specifically to our market that new immigration is really driving. Our government and mortgage lenders also realize that this is a huge program that we do need to develop something specific for our new to Canada people. This program really realizes that most of our newcomers are going to come into Canada. They're going to have new jobs. They're going to not have a lot of Canadian credit established. And the program has really been tailored to take those into account. So you notice on the screen here really the highlights of that new to Canada program. So this is for newcomers to Canada. So it is for people that have immigrated into Canada within the last 5 years. And we realize again that you are going to have a limited Canadian credit history. So we do have some alternative options that we can use to show our lender that you are a good credit risk and there is some credit stability there. Okay, so what they use, most of our new immigrants coming into the country are pretty well patterned to get bank accounts set up and get that first couple of credit cards going. So, you know, they've been taught when they do come into the country to get that started. That's a great starting point, a great jumping off point. But our lenders are going to even go a little bit further and give you some other options to get into that home buying quickly. So what they actually have is a program that you can get into to a new home with as little as 5% down payment. When you come in with a newcomer to Canada program at 5% down payment, the credit that they would like, the lender would like you to establish is a 12-month history, so a 1-year history. And the options that they give you to establish that Canadian credit history are 12 months worth of rental payment history. And if you do have any utility bills, so an SGI payment, a power bill, Sask Power, SaskTel, Sask Energy, an SGI plate payment, an RSP payment, really anything that shows a structured payment that you've made for 12 months, plus that 12-month of rental repayment history, that's enough credit to get you in at a 5% down payment. So there is a 12-month window that you do need there to get in, but there's some alternate credit options that you don't always have to have that credit card or line of credit for the full 12 months. You can do be a rent and a power bill for 12 months. That works just as well. Now, the other option, if you do have a little bit more down payment and you can get into that 10% down payment mark. So let me just kind of reiterate with Andy commenting about the first-time homebuyer incentive, you can use your own 5% and the government's 5% with that first-time homebuyers incentive to get to that 10% window. Once we get into that 10% mark, the credit requirements are even less than the 5% mark. So at 10% down, all you need is 6 months worth of a Canadian bank account showing that your primary account in Canada has been handled well for 6 months. And that will get you in with a 10% down payment that will cover off your credit history. So some great options to get in, even if you don't have that great long-term established credit that you know, some of the banks will tell you that you need. We've got some great programs here. Now, this works great for people that are coming here on a permanent residency. So if you're coming into Canada and you get your permanent residency right away, that's fantastic. That works perfect. But it also works well if you're coming here and you're on a work permit. Okay, so if you come here and you don't quite have your permanent residency yet, but you do have a work permit, that works great for this program as well. Okay, so the only thing that it doesn't work for is if you're on a student visa. So if you're coming here on a student visa, you do need a little more down payment. Some of our lenders are requiring 25, sometimes up to 35%. But if you are on a permanent residency or a work permit, we can get you in at 5 or 10% down. So great options for you there. As I mentioned, of course, down payment options as low as 5%. So you can get that standard 5% that our normal clients do get. Our normal everyday Canadian clients have that 5% option. You as newcomers to Canada also have that 5% option. So great options there. And no additional fees with the lenders or insurers. You can get top rates. There's no premiums to use that program. And as I mentioned, to finish up with, yeah, that government first-time homebuyer incentive and Métis grants, things like that are always available for the New to Canada program as well. So give me a call. We can go through that. We do a great pre-approval check. I'll have a great conversation with you. We'll kind of find out how long you've been in the country, what sort of credit you do have established, where you're working, and we'll do all those checks that Andy mentioned in the pillars, and we will get you all pre-approved and ready to buy a home. Back to you, Andy.
Nice. Thanks, Ryan. Appreciate that. So we have, options for everybody. That's what's so nice about this. So I see there's a lot of questions coming in, so I'm going to let Ryan take over with that stuff. But again, if you guys got a lot of questions too, I'm going to throw the booking a call link in there. You guys can get a hold of us and we'll go from there. But the other thing, I've ran into this once or twice before also when it comes to down payment. So if you're going to use it and you are new to Canada, that money has to be in an account for 90 days untouched. The full amount, right? So if you're going to use full like $20,000, the full $20,000 has to have been in an account for 90 days. But just things to watch out for, because it has happened to me before that we were good to go and they realized they weren't quite there with how long the money's been here for. So we had to wait a little bit longer, but just for a heads up. So anyways, one other thing too I like to touch about, some people have asked me this before, and co-signers are an option as well if you need that help. So who can do this? So basically a family member can co-sign for you if you just need that little bit to help you out. As long as they reside in Canada, have an income, and are able to get approved for a mortgage as well, they can co-sign for you. They can still use the first-time incentive program. You just have to watch that you and your co-signer don't exceed that $120,000 a year as well, annual income. And they're committed to being your co-signer for as long as you can't get approved on your own. But once you can, then we can go and get them off your mortgage, off the title, and it's just a little bit extra cost there with lawyer fees, right? So a couple $100 to get them off. But there are risks, obviously, for co-signers. They're putting their neck out for you. If you don't make the payments, they're going to come after them, and so we just got to make sure everybody's on board with that. So if you want to know more, even if you need a co-signer, you're not sure how it works, Ryan will be able to walk you through that. But that's only like kind of a last case scenario if we need to. But yeah, there are some options out there for that. So keep throwing the questions out in the chat. I see Ryan's going to handle this really well, and I'll just keep going here. So the third mistake for financing is using your bank. Now, everybody has a bank. I have a bank that I use. I myself personally use RBC. It's just what it is. My dad is a GM of a credit union. It is what it is, right? Everybody uses a bank for checkings and savings, has credit cards, things like that. The only thing is there's a lot of things to watch out for that banks use. And I have a really good one that I just finished dealing with in the last month, and it was a nightmare dealing with a bank. So I'll try to make the story short, but just so you guys are aware of the risks to using a bank. Back in August, when the market was still red hot and there was a multiple offer situation on almost every house you looked at, again, I was involved in a multiple offer situation with my clients. And we're, 7:30 at night is when we were dealing with this, because that's a lot of times when real estate happens, is usually after everybody's done work. Well, when our banks closed, right at supper time. So it was 7:30. We needed this question answered for us in order for our offer to get won. Basically, just to put it long story short, long story short for that is that we sold their house. They're wanting to buy this house, but want to take possession of the new house prior to their other one selling. So we need what's called a bridge loan, just to give them a little bit extra, just to get them into their new home before their other home sells and the proceeds get there. But anyways, we need to make sure they were approved for that funding. And at 7:30 at night, we couldn't get a hold of their banker. And without anybody else knowing anything about their finances, I had nobody I could really call. I told them a few times and recommended them to be in touch with Ryan. He'd be a lot more helpful, but they were like, no, our bank has been great to us. They've never had any issues. So, okay, but now we're in a multiple offer situation with no answers, and we can't get a hold of them because when I call the bank, it says, thanks for calling, blah, blah, blah bank. we're open at 9 a.m. tomorrow. If you leave a message, we'll get back to you in 24 hours. Like, well, that is useless for me when we're in a live offer situation. So anyways, we still got our offer accepted with the sellers saying, as long as you can get that, that approval for that bridge loan. So we're able to get that. So we started the whole process, got the financing going, and they were still off, we were going. So I messaged them before I lift conditions. I make sure I get a letter from the lender. So Ryan always sends me a letter. Ryan always communicates with me saying, yes, you are good to remove conditions on the financing side of things. And I do not lift conditions until I get that, because I need to make sure your finances are 100% good. This guy at the bank assured me that financials were good and that you're good to go. So I lifted conditions. I went on a camping trip about a week before their possession date, just followed up with my clients like I always do. And I said, have you talked to the lawyer? Are you ready to go with that? And she's like, yeah, I talked to the lawyer, but the lawyer hasn't heard a thing from the bank yet. So then I get a little nervous and I make some phone calls, and we find out that we don't know where this money is and what's going on. So we were on the phone with the bank for a few days straight trying to get this out, and they're not sure what's going on and things like that. And it was actually a big nightmare. So what ended up happening, they won't admit this, which whatever, but we believe that they did not actually submit the paperwork in time. They were scrambling for it because they've asked me for all the documents again about a week before possession date, which I've never had a lender or any mortgage broker ask me for all the documentation a week before possession date ever. So that was a big red flag. And then they found out that, yeah, the actual approval was not sent away in time. And all of a sudden we're a week beforehand. This was in August. Now we're in September. Interest rates just shot up. So it kicked them out of their approval amounts. The amounts that we offered on the home, they are no longer approved for because of interest rates. So now they're in the middle of possibly losing their home that they're ready to move into. They're also going to lose their deposit they put down, because if this deal falls through after conditions are lifted, you can lose your deposit, and they're going to be homeless. So they're in a full out panic. And all the bank would do is just say, either you find more money from somewhere, you find a co-signer, or get money, have your parents give you some money, which none of those three options were going to work. And that's all they were going to do for us. So on a last ditch effort, I found a mortgage professional to help me out. I would have called Ryan, but Ryan was away at Italy on his his anniversary. So I couldn't call him, which was unfortunate because he would have been on the phone with me right away. But a colleague of mine helped me out by finding me another mortgage broker, and they ended up actually getting them the funds they needed, and we got it done, and they're in their house now. But if we would have just left it up to the bank, they would have lost their home, their money, and it would have been a disaster. They would have been homeless for however long until they figured something else out. So I'm not saying every bank is going to do something like that, but so far I just haven't had a lot of good luck using them. That's why, again, I've teamed up with Ryan. We don't let that kind of things happen, right? So kind of to reiterate a little bit, here's some more pros and cons versus a mortgage broker versus a bank. So a mortgage broker like Ryan, he is just like us realtors. I mean, he's got access to a ton of different products, right? A bunch of different lenders' products. Pretty much works the same hours as we do, right? You need us at 7:30 at night. You need us at 9 o'clock at night with a important situation question. We're going to be on the phone with you, right? If we're in a live offer situation and we need something comes up, I can call Ryan. You can call Ryan. He's going to be there for us. He's not going to be like, no, call me back tomorrow at 9 a.m. when it's business hours, right? He's going to offer you his best mortgage rate up front, right there at the time you ask. Like I said before, we work for you. Our service is free, just like Ryan's is. You can call or text him anytime with any questions. Now, same with the bank, they're generally restricted to their in-house product. They only work their normal bank hours. Once that 5:30, 6 o'clock hits, they're gone. They offer bank posted rates, so you might need to negotiate a better rate. And some people just don't like negotiating, which is fine. I mean, that's what I'm here for. But so they're going to offer you what their posted rates are. And they're more of a personal broker, so they're going to work for the best interest of their employer, pretty much more than their client, which, shouldn't need to be said. And they are a lot harder to get a hold of. Like when I was dealing with that bank issue, I could show you the calls on my phone, And I had probably 100 calls to that bank in 3 days, and he probably answered once. 100 times I called, and one time he answered. That is insane. So this is why we're here to take care of you, right? We're going to show you everything you need up front and what you need to look out for. Also, the other thing to look out for too is there can be bank penalties on mortgages, so pre-payout penalties. So I know it happens a lot. Like I like to say, you know, when you buy your first home, a lot of them are a starter home, right? It's usually never your forever home. Some people it is, but rarely is it your forever home. So for whatever reason, you want to sell it and get out and go find something new, whether it's a bigger upgrade for you and your family, you're moving to a different city, you got a new job, whatever it is to change you want out of this and find something else. There is a chance there's going to be a payout penalty because you're not waiting the full 25-year term. So what Ryan can do is at least let you know what those are. Try to find your low ones if you can. Maybe zero, but I mean, I can't guarantee there's no payout penalties, but at least we're going to be giving you that awareness and let you know that you're not, you know, okay, I want to sell my house. Sounds good. Here's a realtor fees plus, oh, now you have a, you know, a crazy amount of number to pay out this penalty, right? I've heard upwards from $10,000 to $30,000, which is insane, right? So we're going to make sure that big number isn't, you know, do what we can to make sure that you guys are aware of what your penalties are, if there are any. So again, these are all big benefits on why to use a mortgage broker like Ryan over using your bank. Again, I can't say all banks are evil. Just when it comes down to the mortgage side of things, it's just way easier if you just work with us as a team. And it's just from day one, it's going to be smooth. So that's a lot to deal with the mortgage side of things. That's kind of all we have on that side. I mean, obviously, like everything, there's a ton of stuff that goes into this. But if you guys have any more questions on it, if you guys are thinking, you know what, this sounds great, I want to talk to you guys, I want to get in touch with Ryan, I want to see if I can be approved, there it is again. There's the booking link, one-on-one with us. We're going to take care of you. So feel free to do that. But if anybody has any questions, that kind of covers it for the finance side of things. But again, Ryan's going to be here the whole time through. So if you got more questions, just keep throwing in the chat. Ryan's rocking it, answering these things. I'm going to continue on because we're about 20 minutes to 8. So I got some real estate stuff I got to take care of here before we get too late. So, so yeah, anyways, again, thanks Ryan for all your help with the finance things. Keep crushing it. We're going to move on a little bit here. So the first thing I like to deal with when it comes to the real estate side of things is buying directly from a builder. Now, I don't touch a lot on new builds just because majority of people buying their first house don't generally go for a brand new home. Not saying none of them do, but most just go for resale homes. So I'm going to touch a little bit on this just so everybody's got the information, and then I'll move on. But I find new builders are a lot like new builds are a lot like banks. They're there to build their product and sell you their product. And so they're going to work for the best interest of them. And so that's where we come in and say, you know what, I'm here for you. I work for you as a client, or you're as my client. I'm going to take care of you. I'm going to show you a bunch of different builders, see what options are out there for you. You know, maybe this builder has a better setup for you. Maybe this one's in a better area for you. Also, I can, you know, guide you on which builders to watch out for, which builders to go with. I can't say which ones not to go out with because this is a recorded webinar and I don't need that kind of bad publicity. But anyways, I have that kind of knowledge for you as well. So that's just a couple of things. Same things with builders. They offer majority of the new builds. They don't come with basements finished, garages, you know, yard packages, right? So they're going to offer those packages, appliance packages. They're going to offer basement packages, garage packages, things like that, and with a price on them. So I can kind of help guide you to say, you know what, that's a good deal. We should probably go with that. Or you know what, I know some really good, some finished carpenters, some great people like that they could probably do it for a little bit cheaper, and go from there, right? So I can give you that kind of option. So you'll get a lot of knowledge with me going to a builder. So we also have to watch out for contracts, because a lot of people don't know contracts and what to look out for, and there's a lot of fine print. I have known some builders in their contract state, you know, say you offer it at $500,000, gets accepted, but there's a clause in there stating that if the price of materials goes up, so does the price of the home, right? So let's say materials rose up 2%. Well, now the price of your home rose up 2%, right? we want to make sure that's not in a contract, or at least be aware of it and see what you want to do with that. Because contracts are a huge thing when it comes to real estate. And we want to make sure you're covered with that. So just some things like that. And I've also had people ask, well, is it, cheaper just to go directly to the builder and buy through them? And it's really not. They're gonna cost the same whether you bring me with you or go them directly. But if you're gonna go there, you might as well take me with you to have somebody that's on your side in your corner to help you out. So again, not a whole lot to cover on new builds, but just it's a great idea to bring someone like me with you to help you out, to give you the knowledge. At least when it comes to negotiations, we can negotiate appliance packages and things like that into it as well. So but yeah, that's just a little bit on the new build side of things. I don't really touch a whole lot on that, but it's just some options out there. So the other thing I want to touch on is one of the biggest ones when it comes to buying a home, and that is a home inspection. So I don't know if anybody knows, but again, throw it in the chat. Let me know if anybody knows how much these are, but just see if you know how much a home inspection would be just on an average home, to see if you guys know what that would be worth. Or even ballpark number. Yeah, well, so 500 to 600 is a little high, which is okay. Well, 500 would probably be the most I've seen one. It depends on the size of the home, obviously, but average for what my guy usually does it for is about 425 plus GST. So I think it works out to like 440 or something like that. That's on just a normal detached home, right? That's pretty standard. And obviously, if you go for a townhome or an apartment style condo, they get cheaper from there. But about 450 roughly is the average. And I mean, some people might think that's a lot. And which when you're buying a $300,000 home or a $400,000 home, $400 is not a lot considering the investment that you're making. And home inspections are so important to have. They will, like, when we look at houses together, when you and I go and we look at houses and you guys are liking what it looks like, I'm also taking a look at things to make sure like the roof looks okay and there's no foundation looking issues. But I'm only just, I'm just looking at the visual stuff. These guys will go in and they can see through walls, they can see insulation, they can see if there's mold damage, they test everything. So every electrical in there, every piece of plumbing, anything, they will test it. They'll even test all your appliances to make sure those are all working. They'll look at the roof, they'll look in the attic, they'll look at everything. They don't miss a thing. It's insane. They will give you a thick book of everything about your house. And again, for $440 or $450, it is worth every dime. Because the nice thing about this is a home inspection is a condition in the offer to purchase. So if in our offer to purchase, if a condition is not satisfied, like let's say this home inspection just went awful and you don't want this place because it's just so beat up and too much stuff to fix, we can back out of the deal and say, you know what, that home inspection was awful. We don't want this place. That is condition that wasn't satisfied. We move on and go find a new place, no repercussions. So that's what's nice about it. It's like a get out of jail free card in a sense. But like it also helps us for negotiations, because just because you're going to find something in a home inspection mostly every single time. And instead of just saying, well, we don't want to deal with that, we're going to walk away. Most of the time, what we do is we negotiate with the sellers. We just say, hey, look, this, and this is not working properly. We want that fixed before possession date with proof from a professional to fix it. And chances are they're pretty good with that. They'll fix what needs to be fixed. Or if they're not around to fix it, or just say, that we can't deal with that, we're going to knock them off the purchase price of the home. That also works as well. So there's things we can do to make it work, to make sure your home is good for you when you move in. So a couple examples is a place that I did, the electrical, there was issue with a couple of the electrical fuses in the panel, and it was kind of dangerous. Like the dryer wasn't on a pole breaker, so it was on two separate breakers. So if the breaker tripped for the dryer, only half of it tripped. So that's a fire hazard, because if that thing's running on half power in a dryer, that could be very dangerous. So we told them that's dangerous. We want that fixed. They got that fixed for us. The hot water tap was seized open for the washing machine, and because they were bringing their own washer and dryer in, they wanted that replaced because that would have been a hazard to deal with. So they replaced the taps. In the upstairs in the attic for the main bathroom, it was venting out the roof. So all the moisture from the shower gets sucked up through the fan and vented out the roof. But they found in the attic that the insulation around that wasn't even there, and it wasn't even connected to the roof vent properly. So a lot of that moisture from the shower is pouring out of it into your attic. So that's a lot of moisture in your attic. That's mold issues. That's frost issues in the wintertime. So he's seen that, which we wouldn't have seen unless we poked our head in the attic, which good chance we don't. They're going to see that. And so we got that fixed and everything was good to go for them. So that's just an example. Even my own house here, when I did my home inspection on this one, it was 4 years old, and the home inspector noticed a slight drip coming from my main floor bathroom, or my ensuite bathroom upstairs was leaking into my main floor bathroom into the roof or the ceiling. And it was just a small drip, minor, not really much damage happened there, but we caught it, sealed off that drip. It was just a little piece of caulking we needed to replace, and it's been good. But if we never caught that little slow drip that we wouldn't have seen without his home inspection, that could have cost a ton of money in the long run to fix all the water damage. So for $440 or whatever it's going to be for that amount of money, it's worth every penny, because it makes sure your house is good and it shows you maintenance tips and everything like that. So it's very hard to buy a home without this, because you just never know. So yeah, that's kind of the nice thing. I've seen a question about it, so I'm just going to kind of circle back here. So that's a good question about if you do a home inspection and for some reason the house doesn't work. Like you don't see it very often. It doesn't never happen, but not very often you see a home inspection go so south that people walk away from the deal. It has happened before, obviously, but not very often. But if for some reason it does, or financing didn't work out on this place, but we needed to go and we can buy later on, the guy that I use for a home inspector, he has a thing that if you have to use him again because the first deal didn't go through, he usually offers it at half a rate for you, like at half price. So I can't say every home inspector does it, but I know the guy that I like to refer out to, he will do that for you just to help you out a little bit. So you're not paying two full prices for it. So just that's something to be aware of as well. But yes, that can happen, but not always. But that's a nice thing. So I think that was the only one for now. There is a Q&A at the end of this as well. So I'm going to go back in these questions. I see Ryan's crushing it still, but I don't know if I missed any yet, but I will get back to all these. I'm just trying to cover all this stuff. We're already 10 minutes to 8. So I got one more piece of real estate advice, and then we're kind of wrapping this up here. So the last and final thing is, I mentioned it before, is condo review. It's called an estoppel package or a Schedule C. These are built into the purchase offer to purchase contracts. They are mandatory no matter what. So regardless as if you want it or not, we're getting it from the sellers. It doesn't cost you anything. They're getting it to us. The only thing that's not mandatory with these is the option to get your lawyer to look at it. Now, again, just like home inspections, I highly, highly, highly recommend you get a lawyer to look at these. I have an idea of what's in them. I just don't have the qualifications to explain if it's good or bad. That's what the lawyers are for. So I know my lawyer, usually if you're using him for the whole deal, he'll do a discount on this to look at these, because it is a little bit more work for him, but he'll help with that for a little discount on that. But this is so important to have done. So a couple of things that are in there. The main important one is what's called the reserve fund. So what they do is every month of the condo fees, they take a chunk of condo fees and put it into the reserve fund, which is just a big pool to fix anything that has to do with the common areas of the building. So the roof, the siding, main areas, not what's inside your unit itself, but the whole building itself. So we want to make sure that has enough money into it that if anything needs to be fixed, it has enough money to fix it. If it doesn't, what they do is called a cash call, and they come knocking on the door of every unit owner and asking for you to pay a little bit extra. So so just an extreme example, just for easy math. Let's say there's a condo building with 20 units in it. The roof is broken, needs to be fixed. It's going to cost $100,000. There's no money in the reserve fund. They're going to knock on every owner's door and say, we need $5,000 from you to fix the roof because we have no money in the reserve fund. Or we have 50,000 in the reserve fund, so we're going to need 2,500 bucks from everybody, kind of thing, right? So we want to make sure there's enough money in the reserve fund that it's there to fix things. And also what tells us in this estoppel package is what's been fixed through the years, what needs to be fixed. Everything about the building right from the get-go is covered in this thing. And so the lawyer is going to be able to look at the reserve fund, make sure the right amount is getting put in there, make sure what needs to be fixed later on has enough to cover it, right? He's going to make sure that's covered and it all looks good. It's also going to tell you some bylaws of it. So what you can and can't do with your home, whether it's renovations or things like that, right? It's going to tell you about pets and what parking stall you have, and just covers everything you want about the building. So it's a big, thick book of information as well. Highly recommend it goes to the lawyer to get a look at. Why it's also important too, besides just a reserve fund and if they have enough money in there, is also, I had it where I looked with a client and he hates carpet, wants everything to be either hardwood or laminate or whatever, which is fair. So we were looking at a condo. He loved the condo. We thought it was great. Really thought it'd be a good place for him. What happened was we looked in the bylaws, because there was carpet in the bedrooms. He wanted to rip those out, but in the bylaw it specifically stated if you're going to do flooring, it has to be carpet. So what happened was they took this apartment building, converted them to condos and sold them individually, and people ripped out the old carpet, put nice laminate in there, because laminate does look really nice. But the people underneath were complaining because now that sound barrier with the carpet is gone and it's louder. And so they complained, and so they brought this rule in. So I showed him that and says, look, you cannot replace that carpet or with laminate. It has to be carpet. I know you don't like carpet, and he was aware of that. Still ended up liking the unit, still actually went with it, which I was kind of surprised about, but he really likes it and he's still happy with it. But if he didn't look at that, know that was in the bylaws, and all of a sudden he started ripping out flooring and putting laminate in, well, he could have got fined for that and had to pay to get that carpet put back in. So there's some money that you could be losing on that too. The other thing we noticed with that was the one balcony, or all the balconies in the condo building, were in rough shape. Like the flooring was looking like it was going to fall through, and the metal railing was looking like it was rusting through. So again, in this estoppel package, it noted that all the balconies are in bad shape. In the next 2 years, we're going to be replacing them all, from the worst ones all the way down till they're all replaced. We have enough money in the reserve fund, no cash call for that, all good. So he was happy with it, and we ended up closing on that condo. But those are some things of why this condo review is very important, and why a lawyer should have a look at it, is because it's going to cover you with all that kind of information. And that means you're covered for everything too. So again, you don't have to pay for this condo document. It comes no matter what, if you're buying anything with a condo board on it. So not just apartment style condos, some townhouses have condo fees on it, and even some detached homes these days are coming with condo corporation. So if it has a condo corporation on it, it's going to come with this document. So yeah, that kind of covers it with the condo side of things. It'll also explain what they fix and what you fix, kind of take care of. The majority with condos, you deal with stuff in your unit itself, they deal with the common areas, but that's just things they're going to cover in that as well. So that kind of covers it for most of it. It's a lot to kind of cram into an hour, a little bit here, but that's like the very basics of everything. A lot goes into this, which again, I'm going to put it in here again and get to some questions here. But if you want any information on anything at all, or you want to start the process or anything, just please book a call with us. That way we can have time to one-on-one with you and make sure that we cover everything. But again, I appreciate everybody showing up. That's most of it in a nutshell. I'm going to jump onto this Q&A session. I'll stick around for as long as people want, and kind of talk about anything and answer some questions here. So if you do go booking a call, well, again, hopefully we alleviated all this for you guys. If not, we're going to still do our best to make sure you guys don't feel as stressed out about it. But this is a lot of information taken at once. It can be overwhelming, but we're here to help you out. So if you do go to book a call, it's going to look like that. It's going to show the calendar, a time. You choose what you want. If I have availability at that time, lock it in and we can have a one-on-one. So, but yeah, again, well, I'm going to put this, I seen it once here, but book a call with me. That way, the first initial call, I make sure I'm around for. After that, you'll have my personal number, you'll have everything, but I'll also put it in here too. This is all my information. There's a booking link, my website, my email address, my direct cell phone number is in there. If you want to get a hold of me anytime. But the only reason I like to book a call is just because it ensures that I'm available for you for the first initial one-on-one. And after that, you text me, you call me, whatever. It's easy. But yeah, again, thank you everybody. That's a ton of stuff to cover in an hour. But I'm gonna, if Ryan, if you've got things to say, feel free. I'm gonna kind of run back in here and look at some questions here that I may have missed here. So
There were some great questions all the way through it, Andy. The one question at the end from Olumiyiwa was the name of the document on the condo. I believe she's probably referring to the estoppel,
yeah,
but
yeah.
did you want to maybe cover that for her?
It's called, you hear two different things. Usually it's called an estoppel package. So I'll put it here. It's either an estoppel package or what we call, you'll see it called as, in our offer to purchase, you're going to see what's called a Schedule C. And that Schedule C is basically asking them for this estoppel package. And that has all the information about the condo in it. So that's what it's called. But yeah, if I missed anything, I'm going to roll back here again. Was there anything else that I was, yeah, the buying process?
I think we got most of it covered. There were some questions around inspections. We had a great question asking if the inspection had a warranty or a guarantee with it. What if the something was missed and found out 6 months later? Now, again, guys, remember that the inspection is for your benefit. This is for you to have somebody go in and really do an in-depth look at the home and uncover any potential issues that you want to know about. There are things that that if there are issues buried in the walls or things like that, this is only going to be a visible inspection. He's not going to go and hammer holes in the walls to find that. So he's going to do the best he can to uncover all the potential hazards that may be in the home. If there are none, that's great, but he wants you to make you aware of things that he's found. So there can be stuff that is hidden that unfortunately he would never have the ability to see. But it's for your benefit. It's not a warranty or a guarantee. It's really for you to use the information that he uncovers and make a decision if you want to proceed with the home or not. So use it to your benefit. It is absolutely to your advantage to get it, to make sure that you're comfortable with the home that you do purchase.
Right, and so the other thing, this is what I do. I mentioned it earlier, but because of so much information was coming out, so with a home inspection, they'll find everything that's wrong if they can, right? But when we do a walkthrough of the house after conditions are lifted, once possession date is there, I make sure to do a one-on-one walkthrough with you. And what we're going to do is walk through the entire house together. We're going to turn on every single appliance. We're going to turn on the stove, test the dishwasher, the washer, dryer, make sure everything's functioning and not leaking, because maybe he's done a home inspection and then we don't take possession for a month later. We can't guarantee that somewhere between that time and now that the stove stops working or the dishwasher stops working or leaks, right? And if we go in there on possession date and test everything, make sure it's all working at that time, and if something isn't working, I can still have the option to go back and say, hey, look, it's possession date today. In the contract, it states that everything is to be in working order that we're aware of. And it was during our initial inspections, but now it's not. This needs to be fixed because it's possession day. So that's why we make sure everything is tested. We flush toilets, I run sinks, we do every appliance. That way, when we leave, unfortunately, it's like everything, right? It's like a used car. Once you take it off the lot kind of deal, you're unfortunately on your own, but that's why I do everything I can to make sure everything is solid before I walk out and let you guys stay there. So there really isn't much for warranty, just because, especially when it comes to appliances, he can test it that day and maybe the next day it craps out on you. You just can't, it's hard to warranty that unless it's brand new, right? So, but we do a lot of steps to make sure that things are working before we walk out. And unfortunately, it's happened before. Honestly, like a day later, I've had people take possession date and a day later they message me and say, hey, the hot water heater just blew a leak. And it's like, I'm sorry, there's not a whole lot we can do because we did the walkthrough and the home inspector said it was fine. And you just sometimes it just happens, right? So we do what we can to avoid that. And I, test everything as we go. But for warranties, there's really not much. Unless it was a blatant miss, then we can kind of maybe go back to the home inspector and say, you didn't even look at that kind of thing. But I've honestly, the guy that I use and the few other people that I use for it are so solid that that's why I refer them. Same as Ryan, right? The people that I surround myself with, I want to make sure they're working as hard as they can for you and not miss a thing. So I've had it where other people have I wouldn't want to see cheaped out, but they're like, I don't want to spend the $400. I only want to spend $300. So I found this home inspector that's $300, and it was, you get what you pay for some days. And he missed a few things, and it was, yeah, I think we had to get him to come back and look at things again. Yeah, it wasn't very good. So I make sure to find some really good, solid people for you guys. But yeah, hopefully that kind of covered that. Can negotiate the price of a home put on sale 100%. Absolutely, we do, right? That's what I do. I negotiate on prices like reasonably, right? I mean, people have come in and say, well, I don't want to pay that, I want to knock 50 grand off the purchase price. Well, then you get sellers that just say, go kick rocks and I'm not dealing with you, right? But I like to look at comparables that have sold that are close to it and say, okay, well, this one sold for this, it had this upgrades or not, and be like, let's find a good number here, and see if we can work a deal out right away instead of wasting a day or two of back and forth by, I want $1,000 more, or I want $500 more, or things like that. But 100% there's negotiations, and we can even negotiate other things in the home, right? Like I had a guy, actually, Ryan helped me with this client of mine. He takes possession on October 31st. Poor guy taking possession date on Halloween, but there was a couch in the living room, and he asked, this was after negotiations, but he asked, he's like, you think the sellers would want to leave that couch or let me buy it from them? And so I messaged the agent. I said, hey, look, they want to take that couch. And she's like, no, but they'd be willing to sell it to him. I was like, well, they're thinking this number, and yeah, it worked out, and they ended up selling the couch afterwards. So there's a lot of things we can do even after negotiations are done, after the contracts are done. There's always, you can always ask for things, right? So so there's lots of stuff. It's not usually just black and white and this is what you get, right? So things like that. Oh, what else? That. Buying brand new, it's like everything, right? Like I said, with a car, you buy a brand new car, right? You get that nice warranty. Same with a home warranty, but I've sold homes that are, I think the oldest one I've sold was 1917. And I had a good home inspection with that. There was a couple things that we had fixed, but the house is still solid as ever. I still talk with the guy and I visit with him. I stop in at his place every chance I get. He's a great guy, and we have great conversations, and the house is still rock solid. Like it's all just depends, right? It depends on your preference, right? There's, even with buying a brand new home, you only get a home warranty for, a couple of years, then it's gone anyways, right? So it's just based off preference when it comes to buying a new home, right? It's all based on preference. Like you can buy any year's worth of homes, and we're going to make sure you have all the ins and out of it and things like that. So yeah, there's never a guarantee when it comes to owning a home, but that's just the joys of it, I guess, really. So prices right now, it's so is it a buyer's? Well, it's easier. Like when I was hitting homes in June, July, August, it was smash your head against the wall hard, because you would, a house would come on the market that, I've got you on auto email. The minute that house comes on the market, we need to look at it now. And I've been to places where there were showings from 8 in the morning to 10 o'clock at night, all within a half an hour intervals. And it was insane. If you wanted it, you had to buy it that day and put an offer in well above asking price and multiple offers. And now it's getting easier. It's definitely getting easier. We're actually able to say, here's a list of 5 houses or 10 houses. Let's go look at these. The odd ones are still going to have multiple offers on them. Some still do, but that is, it's not nearly as hectic as it was a few months ago. It's definitely more calming, more relaxed. We can actually do a good walkthrough, make sure we get good inspections and things like that, not just a hurry up, you need to buy this house now before somebody else gets it and we're stuck finding something again, right? It's so, it's still low inventory. And, there's not as much coming up as we'd like to see, but it's slowly starting to balance itself out here. So it's kind of nice. And the average prices of condos, it all depends on the condo, right? Like that depends on where in the city, right? Depends on what kind of condo, depends on, everything about it. So it's right. If you're in the west side, I was looking at a couple condos today. Actually, I was showing I was showing a girl some condos and they were anywhere from 100 to 150,000. But then I was showing some condos here in the summertime to actually somebody from this webinar a few months ago, and they were looking at condos down in the middle of the city that are $600,000, right? So it depends on what you're looking for, right? Yeah. And last year, yeah, crazy place. Ontario, Toronto, Vancouver, those places are insane. I know a lot of people in my real estate group I'm part of. We've got people all over like United States and Canada. And I talked to a girl from, she's just Northern Ontario, and she says it's crazy still. Like the amount that prices have dropped there, it's insane. Whereas Saskatoon and Saskatchewan is still pretty level. You don't see those drastic drops like Toronto when that was taken. It's insane. But yeah, now it's a lot easier. And when I was buying a house in 2016 and 2013, it was, here's a giant stack of houses. Let's go take a look. And you could just look for days and not have to worry about it and take your time. Here, you still want to kind of be on the ball, but it's still nice and relaxing to look still. It's kind of nice that way. We can actually take our time. So yeah, that's a good one for Ryan. Yeah, I like that one. But yeah, I've been showing some places lately, and it's definitely not like it was. Yeah. Anyway, sorry, I've taken. I guess we're on Q&A now. So Ryan, jump in.
Oh, good. That's a great question, Kim. With proposals, consumer proposals and bankruptcies, what the lenders like to see is that a proposal or bankruptcy has been completed, that you have paid that back in full, and then they like to see a 2-year history of a rebuild. So they like to see typically 2 trade lines being a credit card, line of credit, or a loan, something like that. They like to see 2 of those reestablished for 2 years minimum, and then you'll be back in the game after your proposal. So looks like you're still a year left before the 6-year period. So can you just clarify that, Kim? Has it been paid for that 5.5 years in the past? Credit rating now 670, perfect. All paid now, perfect. Yeah, so if you've had it paid for over 2 years and you've got some credit reestablished for that 2-year period, there's something we can do to have a look and get you right back in the game. So that's perfect. They do ask for that 2-year window after you've paid your proposal, and ask you for that 2 years worth of that credit reestablished, just to show them that you have that credit pattern back on lock. And we're good to go. So it looks like your credit score has come up substantially. That's great. As long as we're kind of past that 2-year mark, we'll be good to go. So yeah, give me a call. We can chat about it.
Awesome. Yeah, I'll throw that in again if anybody wants to. But yeah, that's good stuff. Thanks. Yeah, awesome.
Great question, Kim. Thank you.
Yeah, if anybody else has questions, feel free, fire on. I don't know. Do you have one of those?
Any tools to check credit scores without impacting scores? Yeah, you can actually go right on and request your scores online yourself through Equifax. So if you go to Equifax.ca, you can actually request your own bureau and they will send it to you. That doesn't impact the score. I do hear a lot about, I don't want you to pull my credit because it will impact my credit score. Just to let you know, the way that those formulations work, the biggest impactors on that score are missed payments. So if you miss any payments on your debt obligations, that does impact the score, and your usage. So if you kind of hold your balance to limit ratio is very high. So if you have a credit card, say worth $5,000, and you hold that balance right up at the top at $4,500, that does impact your score. The sweet spot is kind of between 25 and 75% of the limit on your card. That's kind of the sweet spot that will keep your score going up. If you do go over that, it does start to slightly impact it. Credit pulls and credit checks as long as they're for the same thing. So if you go out and you're looking for a car loan, you know, within a month, and you go to 4 different dealerships and they each pull your credit, that actually only counts as one credit pull, because it's for the same thing in a very short amount of time. Typically it's 30 days. So even if you go to 3 different dealerships and they pull your credit, it only counts as one hit because it's for the same transaction. The same works for the mortgage end. So if you're going in and you do happen to, you know, go to your bank before you do come and see us, you know, and we're going to check that credit as well. It only counts as one because it would happen within that 30-day window. And again, even the one credit pull, you know, it might affect your score by 1 point or 2, nothing more dramatic than that. So don't worry about credit pulls dramatically dumping your score. The formulations just don't work like that. As long as your payments have been made on time and you handle your credit well, your credit score is typically not affected substantially by a credit pull. Great question.
Perfect. Right. I think that,
yeah, great info from Kim there. Sign up with Mogo or Stack prepaid cards. Great options there. Those are great ways to get that credit rebuilt. There's a few other ones. Home Trust has a visa that's really quite you know, easy to get after a proposal or bankruptcy. The other being Capital One. Capital One is typically you can get prepaid cards through Capital One that will really help you build your credit very substantially. Great information.
sure. Yeah.
Look at these questions, guys. You're like, we got a super engaged group here tonight,
Right?
Andy. This is fantastic.
I like it. Yeah.
If I only have a credit card of low limit and my lease is paid through my spouse, will that give me poor credit rating with even with reasonable income? What they're going to look at, Ofalabi, is they're going to look at what comes through your credit bureau. So, I mean, if you do have that one credit card, that's going to count. You know, if we can show that you are joint, maybe on if your spouse is going to be on that, we can show that you're joint on there as well and linked. That will help. Again, you know, if you're looking at, you know, there's some alternative credit options that we can always look at, right? If you have things like strong rental repayment history for a 12-month period, or a bill payment over a 12-month period, we can sometimes show the lender that for credit strength as well, as long as we have substantial strength in other places, good incomes, low ratios, things like that. So it's really about myself looking at the application, going through all the information and finding ways to work with the lender, work with you, and find the best ways to navigate the process and get your approval. As there are lots of options that we can talk to the lender about. It's really about making sure that they're comfortable with the fact that you know, they're comfortable with your credit repayment and comfortable with the credit that you've shown. So the ways that we can show that are, yeah, through credit cards and lines of credit and loans, but there's also alternative options that we can use through rental payment histories, bill payments, things like that. So let's have a chat and we'll go through what you got and find some great solutions for you.
Right.
What do you got from here, Braden? If you make a deal with a current home buyer, what's the longest someone would have to wait to get the keys for the place? I'll let you take that one, Andy.
Yeah, so I think, you know, I like to give 2 weeks for conditions. That gives us all the time to make sure everything's satisfied. And then usually after that, I'd say earliest we could do is probably another 2 weeks. Now I'd have to talk, depends on your lawyer, right? I can talk to my lawyer, see if you can go a little earlier than that. They just need time to get everything processed too. So from, like, let's say start to finish, from when we get an offer accepted to everything done, you know, average is about a month, and that's if there's nobody in the home. If there's somebody in the home, once we lift conditions, usually they have about a month to 2 months to get out of there as well, right? Because they need time to find a place as well. Sometimes it depends on their situation, right? If they're looking to go into like an old folks community or something, usually they can get out pretty early. But if they're looking to buy another place, they need time to get a deal on a place and things like that. But usually about a month to a month and a half is a pretty good average from start to finish to get keys. Yeah, that's you know, and the only time it's been longer is if there's been a tenant in there and they didn't want to break the lease. And so I know we purchased a place in May and we didn't get possession until August 1st. So that was the longest it's taken me, but that's because of the tenant situation. But other than that, yeah, usually about a month to a month and a half. So yeah, I see this, and so honest opinion about rent to own, and that's I'm gonna let Ryan touch a bit on that one
I was
because
gonna
that's
say,
my
do you want me to grab this one,
yeah,
Andy?
no, that's, nope.
You know what? That's a great question, Gabriel, and one that we do hear quite a bit. My honest opinion is there is availability to use the rent to own program if they're structured right. The biggest thing that our lenders and insurer partners look for is that number one, that contract is very clear, concise, and drawn up right at the beginning of the arrangement. There will be a rent portion that will go to the rent for the house. Anything over and above market rent for that home, it can be used for down payment. So it's not really just setting an arbitrary number saying, you know, I'm going to give you $2,500 and we're going to put $1,500 of that into a rent account. It is based on current market rent to ensure that, you know, that everything is above board, right? So they want to make sure that if market rent for that property is $1,500, anything over and above that would be what you could use for rent. Now, my honest opinion of it, it's very tough to get done from a lender perspective. Even still, it's done on an exception basis. It is looked at quite stringently, as long as it meets the qualifications and the borrower is strong. You know, I've seen them work, but it is an exception at both the lender and CMHC level. So they can be tough to do, right? So I just want to make sure that it's not a slam dunk when those go through. They do look at the contract, they do look at the market rentability of that house. They do really make sure that the money is put into a separate holding account for that rent and can be easily tracked. And then it is an exception based on the strength of the deal. So great question. I know that's a little bit gray, but you know, I just wanted to make sure that we were completely upfront with you about that transaction.
And
Hopefully that answers your question.
Yeah, some rent to owns too still require some of a down payment. I've heard from too, not as much as 5%. I've heard anywhere from 1% to 2% still. And like Ryan said, make sure that contract is rock solid, because I've actually dealt with a few people now that have been into it, and it's a mess, because what they were thinking they were getting, or they've been putting money into the upgrades of the home thinking they're owning it, but now they're getting out of the home and they're not getting the money back, and it's a disaster. So you got to really watch those contracts, right? And with low inventory, it is harder to find a home just in general. In a sense, it's even harder to find somebody that's doing rent to own, right? You're really limiting your available or your options for finding a home. But yeah, if that's something you're really strongly wanting to do, just definitely make sure you have that involved, that lawyers involved, that contracts and things like that. So would I be able to use down payment program like that first time home buyers with the government and the Métis Society, or can we use one? That's a good question. I've actually never had that.
I'll grab this one. Yeah, I'll grab this one from you, Andy. Great question, Braden. They actually initially, when the first time home buyer incentive came out, they were allowing that in conjunction with the Métis first time home buyer grant. One of the stipulations on the first time home buyer incentive is that the client does have their own 5% down payment. So having the 5% gifted to them from the Métis version, and then using the first time homebuyer incentive, unfortunately, you can't use those together. You do have to have at least that first 5% from your own funds. After that, you can use both, but you do have to have that original 5% to use the first time homebuyer incentive. That is one of the stipulations of the product. So if you have your own 5%, you use the first time homebuyer incentive, you can throw the Métis grant on top of that, absolutely. You just can't use the Métis grant as your 5% to get the 5% from the first time homebuyer incentive. Hopefully that clarified that for you.
Nice. That's good. It's good. If you want, you know, Braden, if you want to read that stuff, I do have them saved. It was from the Métis website, so I had a few people actually read. So if you want, I can email you that off later on too. You can have access to that. There are some. I'm gonna look into it again, but there are some stipulations with that the Métis Society one too. I think that from what I've heard from other people trying to use it, that there's some limitations on it as well.
There are, yeah. And they're all individual, right? It's not a blanket Saskatchewan Métis Society one. There's actually a few different ones depending on the bands. There's some band ones as well. So really look at the fine print with each grant position and ensure that you do kind of know those qualification pieces. Some is based on income, some it's just a straight gift depending on what band you belong to. So lots of different options there.
So Métis funds not for the Indigenous people. So that's, yeah, it's strictly for the Métis Society, which is, yeah, I'm not sure where they got, it's just the Métis thing. I don't, yeah, I'm not sure why they just zeroed out on just the Métis get this, but that was from the Métis Society decided to help out. So I'm not sure I don't even know if there'd be any bands of just Indigenous people that have something like that in place. I don't honestly know or haven't heard from that yet, but yeah, so far
I haven't heard any. It's the Métis grants that I have heard about, and they are very structured for the Métis people. You might want to even reach out to the Métis Society and see what options they do have and what qualifications they would have to apply for that grant. Great question, Caroline.
It is, yeah. Yeah. If anybody has any more questions, keep firing them out. These are all great questions. We got at least some time still. I'm good. We're 20 after 8, but there's still a few of us on here. So if any question, if not, again, as always, I'm going to throw this out there every single time. But I'll say book one with us and we'll talk one-on-one. But yeah, if anybody else has any questions, or Ryan, if you have anything else to add here, yeah, I think we covered a lot. And hopefully that was helpful for everybody.
I'll just kind of echo Andy's sentiments there. I mean, lots of the questions that we're getting are fantastic and very specific. So I would recommend giving Andy and I a call, when we can really go through your specific situation, really have a great talk, find out about your story and really go through the information to make sure that we're finding the best fit. If you have options to go through that Métis grant, let's talk one-on-one and we can really find out all the options that you do have at your disposal for that down payment and really analyze the situation for, really that's your specific situation. So we can tailor your fit in your home and your mortgage to your needs specifically.
Awesome. Yeah. And yes, yeah, Braden, you have to have some 5% of your own funds in order to use that first-time home buyer. So you do have to have your own in order to use it. Yes. Unfortunately, the government's just not going to give us down payments all freely like that, which would be nice, but we all know how the governments work. Nothing's ever free. So except for our services, right. When it comes to buying a home, those are free. It's the other side of things that aren't, right? Like I said, when it comes to, if you go to sell your place that you buy, that's where the realtor fees come in, because that's where the fees are. But buying side, us is free. Average amount you should have, it all depends. So a $300,000 home, 3 to 350 is about an average price home in Saskatoon. So that's 15 to whatever, 15.5 or something like that. Or yeah, my math sucks. That's why Ryan's financial, right?
Yeah, the big thing we talk about, I mean, the minimum down payment, Braden, is 5%. And the bank also does look for 1.5% closing costs to pay lawyer fees, things like that. So the number that you're going to need is 6.5% of the purchase price. So, based on a $300,000 house, you would have 19.5 that you would need to put into your down payment.
That is, yeah, and I always forget to touch on that. Thanks, Kim. Appreciate you showing up. We'll be in touch later on. But again, here's both of our numbers. If you need to reach out to us, booking a call is always the best, just to start out with. But yeah, feel free to reach out to us. But yes, like Ryan touched, there are some closing costs. So some costs, yeah. The sorry, the home inspection is one, and lawyer fees are another. So roughly an average lawyer fee. My guy that I really recommend, he's anywhere, depends on what you're buying as well, right? Anywhere, it can be an $800 fee to upwards to $2,000. It all depends on what he has to do and things like that. I have just a disclaimer so you guys aren't caught off guard either. I'm not sure if all lawyers do this. I am going to reach out and find out, but I know I've heard from a few lawyers that if you use the first-time homebuyers incentive program, because it is a shared equity mortgage, it is essentially a second mortgage. So some lawyers charge twice for mortgage processing because it's two separate mortgages. So just a little thing to watch out for. So it could be a $1,500 bill, or it could be anywhere from $2,000 to almost $2,500 because he has to do the second mortgage on there. So it all depends on the lawyer you use. again, my guy's super awesome, and he's been giving me deals like that because we work together so well. So, but yeah, just things like that to watch out for. Instead of just a down payment, there are some other fees, right? Obviously, moving costs too. If you're like me and you're over 30 now and you don't want to lift a couch up and down a flight of stairs, you got to hire movers, because I don't do that anymore for pizza and beer. It's just too hard. I had to move a washer and dryer down my basement with my cousin the other day, and felt like I threw my back out. But yeah. Yeah, no, again, thanks everybody for being here, taking time out of your evening. Just, we're happy you guys all showed up. We appreciate everybody. If anybody, again, like I said, have any questions, throw them in here. If not, reach out to us. I put our numbers in here. Book a call with us. Either way, we're easy to reach. And yeah, look forward to talking to you guys again.
Thanks so much, guys. Have a great night.
Yeah, you guys have a fantastic night. Have a great weekend. We'll talk soon. Thanks again, Ryan. Appreciate everything.
Thanks, Andy. Great as always, buddy. Look forward to it. Take care.
See you guys.